Okay, good afternoon, everyone. Thank you so much for joining us today. This is Deputy Commissioner of Energy at DEEP, Vicki Hackett. DEEP has coordinated with Governor Lamont's office, Department of Economic and Community Development, the Connecticut Green Bank, Eversource, and UI to bring you this webinar. And we just want to let you know that we're going to continue to coordinate to help you all work through this crisis. We want to recognize the contributions made by our clean energy businesses in Connecticut. We have over 40,000 clean energy workers in Connecticut in energy efficiency, clean energy generation, alternative transportation, clean grid and storage, and clean fuels. We've reached out to over 2,000 contacts for these 3 webinars. They'll be the same today generally as they will be on Monday and Tuesday. But as we get updates on some of the federal programs, we will update the presentations. We want to really stress the importance of you applying for federal assistance as soon as possible, preferably starting today. The funds are going to have a limit, and this is a nationwide crisis, so it's really very important that you get in early. We also want to let you know that this is just the beginning of our engagement with you all. Governor Lamont recognizes the critical nature of this industry to our economic recovery, as well as reaching our clean energy and climate goals. And we know that it took a long time to build up the clean energy workforce in Connecticut. And we need to make sure that the industry is ready and able to hit the ground running on the other side of this crisis. So to that end, we're developing a survey to gather information, important information regarding the impacts that this has had on your businesses, and what your ideas are about what would be most helpful to you throughout this extraordinary time. So stay tuned for that. You'll be seeing that probably next week. So I'm just going to do a quick review of the agenda. We're going to have an update on the COVID-19 situation from Nick Simmons of the Governor's Office. He's going to give you a status on the pandemic and talk about some of the impacts on unemployment insurance. Tommy Hyde from the Department of Economic and Community Development is going to talk about state assistance. And then Tommy Hyde, as well as Brian Farnan and Bert Hunter from the Connecticut Green Bank, are going to talk about federal assistance with a focus on the CARES Act and the Paycheck Protection Program. Then we're going to have questions and answers led by Matt Masunis of the Green Bank. Please note that if you have questions, you can type them into the chat box so that we can respond to them at the end. And Matt Masunis will manage those questions. So we're recording this webinar, and that will enable us to distribute it as well to clean energy contractors who weren't able to attend. So with that, I want to introduce Nick Simmons, who's going to give you an update on COVID-19 and talk a little bit about unemployment insurance. Thanks.
Hey everybody, can you hear me?
Perfect.
Yes.
Yep.
Great. Well, thank you so much for the introduction and for everybody for logging on today. Just want to first say I hope everybody is safe and healthy and doing okay in the middle of everything that's going on. And thank you to Brian for putting together this webinar, and all of my colleagues across agencies here for this group effort. So COVID-19 continues to spread across the state. As you know, as we sit here, it's Friday, April 3rd, and we've had an uptick in incidents over the past 2 weeks. In particular, things have been accelerated. To be quite candid, we still think that the next 2 weeks are going to continue an upward trajectory, with the ideal situation being a steadying and decline. So as of now is the best way to be able to fight the disease, and to be able to get back to normal as quickly as possible. And the governor remains absolutely laser focused on ensuring we have a V-shaped recovery, not just a U-shaped recovery, where we linger down in a recession for a long period of time, but as things get back to normal, that throughout this time period, we have cushioned this impact for individuals and businesses such that the links of our economy remain strong, and that they are not eroded in any long-term way. Go to the next slide. One of the biggest issues facing the state in this time period, I don't think is any surprise. You've probably been reading much about this in the news, but we have had a exorbitant number of unemployment claims over the last 2 weeks. To put it in a perspective, in 1 year, a usual number is 180,000, and just in the last 2 weeks, we are facing 220,000. There's that graph that the New York Times put on their front page showing the perspectives of the unemployment claims over the years on a monthly or weekly basis, and then showing what's happened 2 weeks ago. And the line for 2 weeks ago went up the page, like the physical page of the New York Times, all the way up to the headline, just to put that into perspective. So our team, I'm proud of our team at the Department of Labor. They've done an incredible job considering the circumstances. They are moving fast. We are bringing in more personnel, and we are devoting as many of their state's resources as we possibly can to try to process these claims as quickly as possible, and to get claims out as soon as we possibly can. And that's obviously a combination of people power, of software power, and of process power. And we are working across all three. Towards the bottom of this slide are just a few details about some of the federal changes to the typical unemployment compensation structure. So we've gone up to $600 plus for 13 weeks. The federal level has allowed us to extend benefits from a typical 26-week period to 39 weeks. And we've extended eligibility. So those that were not traditionally eligible, like 1099s and the self-employed, are now eligible. Next slide. So those who are eligible, like I just mentioned, we've added the self-employed to the category. Level of benefits range from $15 to $649 a week. That's at the and the feds will bring that range up with their contribution to 615 floor and a ceiling of 1,249 a week. And so what we've seen so far on average, a Connecticut benefit is increasing about $400 to $1,000 per week. And if you want to share with your employees, with your community, how they can file quickly, our website is filectui.com. So just a few different terms here and sort of criteria and details about eligibility. But for a temporary shutdown, if you are the employer and you have the temporary registration ID number and a return to work date, that drastically increases the process. Your application will be processed immediately. So obviously having those two details really speeds up the process. There is a shared work approach. So employers, instead of actually firing or terminating employees, instead, if you want to reduce hours by 60%, the UI will come in and pay for the remainder of that. So that, which includes the numbers that I mentioned before. If you, for employers with a high number, this is just another tip to keep in mind, that if you have a high number of unemployed workers, it usually goes with a payroll tax increase, just due to various ways our formulas are structured. But we're currently reviewing this, so we'll be back with details. And like I said, also you know, we've waived a lot of things on eligibility, including the typical work search requirement that we include in unemployment insurance. If anybody has any still questions, I know that that's a lot of information, and there's a lot of different criteria that is out there and changes. But we have a Connecticut coronavirus page that everybody can go to visit to get access to all this information, which is being filled by our Department of Labor and our Department of Economic Development every day. So with that, I will turn it over.
Thanks, Nick. Hi, everyone. My name is Tommy Iden. I work for the Department of Economic and Community Development here at the state. Next slide, please. So as many of you, I'm sure, have saw, the state recently came out with a bridge recovery loan program. That program was for loans up to $75,000. Extension. In the 3 days that it was open for, we received over 5,000 applications, which is, you know, to Vicky's point at the beginning of this, is why it's so crucial for everyone, as soon as this call is over, to really start applying for some of these programs that are out there, because they will, you know, they will dry up potentially fairly quickly. You know, we didn't expect to see that big of a response, and we ended up shutting it down after 3 days, as I said, which we weren't planning on doing. The original pool of funding was $25 million, and we have since added another $25 million, bringing the total amount to $50 million. There has been some confusion out there, and I've gotten a lot of questions as to whether or not this program will be opening up again based on that extra $25 million. And at this point, there is no plan to do so. You know, with 5,000, you know, if you do the math, the 50 million, it'll be tough to cover many of these loans out there already. For those of you who may have submitted an application already, we have removed the 7-day deadline to upload additional documents. So there's no more deadline. You can take your time with preparing those. And if you submitted, you know, incomplete, partial, or feel like you can submit better documentation due to the deadline, I would encourage you to just have that ready for when one of our team members reach out to you for next steps. As if you have updated or better information, we will take that under consideration. The other question we get is, you know, what if I applied for this loan, an SBA loan, and potentially the PPP loan? We would encourage you, if you've already applied for ours, wait for now until, you know, you hear from the federal government on one of the other loans available. And if a time comes where you get that money and you no longer need the state assistance, then you could just reach out to us. We do have an email address, decd.covid19@ct.gov. Let us know, and we can cancel your application. Next slide, please.
Tommy, on that one, this is Vicki Hackett. I just want to clarify that if people have applied for your loan but haven't heard yet, you really want to encourage them to also apply for the federal relief immediately. Is that right?
Absolutely. You know, we've basically taken team members from across the agency and have dedicated those to doing nothing but processing loans. So we are working through it. Again, whether you've heard from us or not, we would encourage you to explore the federal programs. They do offer grants and loan forgiveness, which we are not offering at this time. Thanks for that, Vicki. The CARES Act, which was passed last week, does offer homeowners with federally backed mortgage. Offers the following protections for homeowners with federally backed mortgages. So services of mortgages are required to provide 180 days of mortgage forbearance to borrowers attesting to COVID-19 financial hardship. They have instituted a 60-day moratorium on foreclosure proceedings, foreclosure-related evictions, and foreclosure sales for federally backed mortgages. This 60-day period began on March 18th. Additionally, they have provided credit protection, so homeowners' credit scores will not be impacted. And then just recently, on March 31st, Governor Lamont announced an agreement with over 50 credit unions and banks in Connecticut to offer mortgage relief to the state's residents and businesses who continue to face hardship. Under the agreement, participating financial institutions for borrowers are offering mortgage payment forbearances of up to 90 days, which will allow homeowners to reduce or delay monthly mortgage payments. For at least 90 days, participating financial institutions will waive or refund mortgage-related fees and other fees, including early CD withdrawals. Financial institutions will not start any foreclosure sales or evictions for the next 60 days, and later missed payments, again, will not be shared with credit reporting agencies, and therefore your credit will not be impacted. I do want to note really quickly that there has not been additional guidance yet for those of you out there who are currently leasing or renting, and we would encourage you to reach out to your landlord and try to come to some sort of agreement if that is needed. And as Nick had mentioned, all this information is on the governor's website as well as the Department of Banking website. Next slide, please. On the emergency paid sick family leave programs that were authorized in the Family First Act. The federal government is paying the cost of leave up to $511 a day for sick leave and $200 a day for family leave. Generally, employers of 500 or fewer employees are required to offer these programs, and these programs are good ways to keep workers employed while waiting for a PPP loan, which is something Brian's going to take you through a little bit later. Additionally, in Connecticut, cities and towns have announced property relief and are required to offer eligible taxpayers either a 90-day deferment for any taxes on real property, personal property, or motor vehicles, or municipal water, sewer, and electric rates, charges, and assessments, or reduced interest on delinquent tax payments to property owners. So this is municipal by this decision, from my understanding, is happening at the municipal level, and we would encourage you to reach out to your local leadership to see which program they are offering, or both. And at this time, I would like to introduce Brian Farnan, who is the General Counsel at TT Green Bank, to take you through some of the CARES Act.
Thank you so much, Tommy. And I really do want to thank the governor's office, DEEP, and DECD. They've been amazingly helpful in these unprecedented times. And I also wanted to point out, you often hear this term about, what is essential workers. And I just want to point out that Homeland Security has deemed energy efficiency and renewable contractors as essential critical infrastructure workers. So I think that's a good thing. But let's jump into the next slide, and we'll talk about a little bit high level about the CARES Act, which is the Coronavirus Aid, Relief, and Economic Security Act. It's the $2 trillion stimulus package that was passed by Congress last week to assist business owners with emergency needs. Really kind of an unprecedented legislation passed with bipartisan support. I'm sure you've heard much about it. As part of this, there's direct payments for stimulus of $1,200 for individuals, $2,400 for married couples. There's a child credit component to that. All that phases down based on the level of income you have. There's also pandemic unemployment assistance. We'll talk about all these a little bit later. And those are really kind of like, when you think of like those non-traditional employees that are out there that are not W-2'd, which is a growing segment of the market. It's really aimed to kind of help them out. And, many on this call, I'm sure, pay things like Social Security taxes for their employees, and things like that are being delayed. So with that, let's go to the next slide. So the CARES Act is really what we're trying to do here, is work with what are the cash concerns, the liquidity concerns of small businesses. And, if you've got, capital that you need to cover to retain employees or to potentially bring them back on, that's where the Paycheck Protection Program really makes a lot of sense for you. If you're looking for a quick infusion of a smaller amount of cash, we'll talk about this emergency economic injury grant that comes along with the request for financing. And then obviously, if you have fears about keeping up with your payments on current or potential SBA loans, there's this small business debt relief program that can also help you. Let's go to the next slide. Okay, so the real big program, I think one of the big takeaways under the CARES Act, where I think it's going to be most important for small businesses, is this Paycheck Protection Program. It's $349 billion, which is designed to help small business to keep them open, provides direct incentives for small business to keep their workers on the payroll. And if the portion of the loans, if all the employees are kept on the payroll for 8 weeks and the money is used for payroll, rent, mortgages, mortgage interest, or utilities, there's actually a forgiveness portion about with this. And one thing that I know we want to stress as a key takeaway from this webinar is the program is available as of today, and we do really strongly suggest that you act now. We don't know if this funding and financing is going to be available for 1 week, for 2 weeks, for 3 weeks, for 4 weeks. So, start with your local relationship bank, the ones who know you, they already have all your information on the file. Do that today if you can. Reach out to them. Next slide. So let's talk about what you can use the loan proceeds for. First and foremost, payroll costs. Think of, compensation, what you're paying to your employees. If there's vacation or payment, parental or family leave, that's included. There's also group healthcare benefits. You can use this financing and loan to pay those, or if you have to pay retirement benefits. Payment of interest on a mortgage obligation. If you could also use the funds for that, rent, and then obviously your utility payments. Think about what you can use these loan proceeds for when you're weighing how to pay outstanding obligations, would be kind of my advice to you as you're looking at what cash you have available to you. And this will hopefully, thinking of getting the Paycheck Protection Program, getting a loan through there, could be used for these specific holes. Next slide. So who can apply? So very simply, it's pretty much small businesses with less than 500 employees. It could be a sole proprietorship. You can be an independent contractor, nonprofits too. There are certain industries where you may have more than 500 employees, but I think that's a really unique scenario. So it's probably not applicable, I would think, to most people on this call. So next slide, and we'll talk about how you do apply. So basically, you do apply through an existing SBA called 7A lender. And we would, again, highly recommend that you start with your local lender that is your relationship bank. Most of them are SBA lenders. So let's go to the next slide, and I'm going to actually pass this off to Bert Hunter to chime in.
Yeah, thanks, Brian. Yes, we understand from the Connecticut Bankers Association that nearly all banks in Connecticut are SBA lenders, and you see them on this slide. This list came from the Small Business Administration. That said, there are 4 additional lenders that are missing from this list, notably Community Investment Corp of Hamden, Laurel Road Bank of Darien, United Bank of Hartford, and Worry American Bank of Fort Lee, New Jersey. But if you don't happen to see your lender on this slide, and these slides are going to be made available and posted after the webinar, call your bank or credit union and ask if they are a participating PPP lender, and they'll be able to either handle you, or if your bank is not participating, then get back to us on our website. I think there's a posting for this webinar for questions, and we'll seek to assist you. Over to you, Brian.
All right, perfect. Now let's go to the next slide, and I really want to talk about the loan forgiveness first and the loan details. So, obviously, I think a key question for people is, how can the loans be forgiven? That's going to be a pretty important thing from a business perspective. So the debt will be forgiven if it's used in the 8-week period following the loan for purposes such as payroll, rent, mortgage interest, or utility payments. However, any forgiveness will be reduced in proportion to any reduction in the number of employees as compared to the prior year, and any reductions in employee compensation greater than 25%. So think of it like this. So such reductions can be offset, if an employer then rehires or adjusts those wages by June 30th, 2020. So that's, I think, a key element. So if you follow within those guidelines, a very key component of what this Paycheck Protection Program will be available to you, which will be the loan forgiveness. And then another thing I want to point out, this isn't a situation where you're going to be shopping for rates. All the loan terms will be the same for everyone. It's a 1% fixed rate loan. Maturity, it's 2 years. Originally it was talking about 10 years, but it's 2 years. And then the loan payments will also be deferred for 6 months. There's no collateral or personal guarantee that are required, which is often typical under a typical SBA loan. And then the SBA, because of the uniqueness of what we're facing with, they're not charging any small businesses fees. Let's go to the next slide.
So, Brian,
All right.
yes, on the SBA has tried to simplify this application process, and communications from the Green Bank. There were included hot links to the application. It's a 4-page packet. The first 2 pages are what needs to be submitted to your bank or credit union, and the final 2 pages are instructions. You do need to pay attention to some particular information that you have to submit. If you are owned by more than one person, 20% owners or greater have to attest to certain things on page 1 of the form, or be sure that you're not caught up in any legal difficulties, which are spelled out on page 1 of the form. And on page 2 of the form, as shown here on this slide, you and all 20% or greater owners must self-certify certain things. That, first of all, most importantly, that the economic uncertainty of the COVID-19 situation makes this loan request necessary to support the ongoing operations of your business. You'll have to attest to certain uses of funds that are in compliance with the program. You might have to submit, depending upon what your banker wants to see, they do need to verify certain aspects of payroll costs. So it would be a good thing for you to have handy your most recent 1040 Schedule C, business tax return, payroll tax information, which can come from bank records, things that attest to the number of employees that you have on your payroll, I think, for the February period. Now, keep in mind that less than 25% of proceeds are to be used for non-payroll costs. You will have to attest to that. You'll have to attest to the fact that you will not be double dipping, meaning you can only get one PPP loan, and you can't get an EIDL for the same uses as a PPP. You can get an EIDL, you just can't use the money from the 2 programs for the same dollar amount shortfall that you're experiencing. So you'll have to be attentive to that. You'll have to attest that this is all true and correct representations by your business, as well as the accuracy of the tax documents that you're submitting to your bank. Over to you, Tommy.
Thanks, Bert. And as Bert just mentioned, so about the economic injury disaster loan. So Connecticut was actually the 3rd state. Excuse me. Connecticut was actually the 3rd state in the nation to become eligible for these economic injury disaster loans. They have been available for a few weeks now, and so far the Small Business Administration has processed about 139 loans worth $31.5 million. So they are, ramped up. They're expecting this, and they're doing their best to move these quickly. For EIDL specifically, I've been told it can take anywhere from 10 days to 2 weeks to actually, get the money in the pocket. To get the money in your pocket, based on backlog, it might be a little bit longer than that, but so far they've been able to do a pretty good job getting money out the door. And these loans are up to $2 million for both businesses and nonprofits. There's a 3.75% interest rate for small businesses and 2.75 for nonprofits. There is the ability for principal and interest deferment, but these are going to be up to the administrator's discretion. So after you apply, you'll get a call. They'll talk you through what they're going to offer you, and at that point, you can ask for these, but it is up to the administrator's discretion. Similar to PPP, as Bert and Brian mentioned, they have relaxed many of the requirements to get the money out the door faster. For instance, there's no collateral requirements for anything under $200,000. Next slide, please. And so this is the grant component of this was actually passed with the CARES Act. So important distinction here. If you've already applied for your EIDL loan and you did not have the ability at that time to request advance or grant up to $10,000, you actually need to reapply for the loan as well. And you don't have to worry about canceling the first one, but you are going to have to reapply so you have the option to get that $10,000 advance. Now, it's important. It's up to $10,000. Now, obviously, not everyone is going to get $10,000. And again, when they reach out to you, they will tell you what you're eligible for that grant. That grant/advance is what they call it. And that advance, after you apply, is supposed to be in your bank account within 3 days. And it can be used to keep employees on payroll, to pay for sick leave, meet increased production costs due to supply chain disruptions, or pay business obligations, including debts, rent, and mortgage payments. Another thing is, have your documentation and financials ready, because when they do reach out to you, and they're talking you through what your offer is, they may ask for additional information. Next slide, please. And Bert touched on this a little bit earlier, so we can breeze through this. But if you do get an EIDL, you can also get a PPP loan. Whether you've received an EIDL loan unrelated to the COVID-19 or you received it related to the COVID-19 emergency, you are eligible for both. But as Bert mentioned, you have to use the funds for different things, and there's no double dipping. Next slide, please. So some of the other programs that are available through the CARES Act, and I apologize because one of them did not make it on this, but we can update it and send it around if that need be. There is a program called the Small Business Debt Relief Program, which will provide immediate relief to small businesses with non-disaster SBA loans, in particular 7A, 504, and microloans. So if you have an existing SBA loan, the SBA will cover all loan payments on that loan. Another option out there is the Employee Retention Credit for employers subject to closure or experiencing economic hardship. And with this provision would provide a refundable payroll tax credit for 50% of wages paid by eligible employers to certain employees during the COVID-19 crisis. The credit is available to employers, including nonprofits, whose operations have fully or partially been suspended as a result of the government order limiting commerce, travel, or group meetings. The credit is also provided to employers who have experienced a greater than 50% reduction in quarterly receipts measured on a year-over-year basis. The delay of payment of employer payroll taxes, this allows taxpayers to defer paying the employer portion of certain payroll taxes through the end of 2020, with all 2020 deferral amounts due in 2 equal installments, one at the end of 2021 and the other at the end of 2022. And then finally, the SBA has beefed up its counseling and training efforts. If you need a business counselor to help guide you through this uncertain time, you can always turn to your local small business development center, women's business center, or SCORE mentorship chapter. These resource partners and the association that represent them will be receiving additional funds to expand their reach and better support small business owners with counseling and up-to-date information regarding COVID-19. And next slide. And I think with that, we will open it up to questions. So again, if you have any questions, please feel free to type them in the chat box, and Matt Masunis at the Green Bank will take it from here.
Thanks, Sami. This is Matt, and yeah, please type any questions you have in the chat box rather than greet you with stony silence for the next minute as we await questions. I'll reprise a few of the high-level points that folks might be interested in the meantime. And I'll also remind folks that we'll be covering this webinar same time, noon time, again on Monday and Tuesday. So when it comes to the Paycheck Protection Program, where and when can you apply for that? Well, the answer is starting today, April 3rd, 2020. Small businesses, sole proprietorships, they can apply for and receive loans to cover the payroll and other certain expenses through existing SBA lenders. Starting next Friday, April 10th, independent contractors, self-employed individuals, they can apply for and receive loans to cover their payroll and other certain expenses through existing SBA lenders. Again, you should immediately complete the application form and submit it to your bank. In terms of how long the program lasts, although it's open until June 30th, we do encourage you to apply as quickly as you can because there is a funding gap and lenders need time to process your loan. We've heard through the grapevine that this funding, it could be gone as quickly as 1 week. So do apply immediately. We can't stress that enough. After this webinar, complete the application, get it into your bank. How large can a loan be? They can be for up to 2 months of one's average monthly payroll costs from the last year, plus an additional 25% of that amount. And that amount subject to a $10 million cap. So if you're a seasonal or a new business, you'll use a different applicable time period for your calculation. Payroll costs will be capped at $100,000 annualized for each employee. Those are some examples of items we might have anticipated coming in as questions. We'll give it another minute. Again, please enter any questions you might have in the chat log. And I'm not seeing any so far. So as a just in case, I'm actually going to give out my email so as to forestall any possibility of technological problems. I don't think we have any, but in case anyone can't see their chat come through, my email is matt.masunas, M-A-C-U-N-A-S, at ctgreenbank.com. So I'll be checking that throughout the next couple minutes as well, just in case. Presenters, do we have anything else that you were thinking we might cover that might come up during the Q&A? And silence will be a no.
No, I'm good. I think we got it all. But if people do have follow-up questions, please let us know and reach out to Matt, and we'll make sure to get them answered.
Yeah, we'll keep it open for a little while longer and give people a chance to either send a question through the chat or to Matt's email.
All right, no questions so far. I'm even checking my spam folder and I'm not seeing any follow-ups through my email. So we'll leave it open for just one more minute. All right, I think that should cover it for the moment. Again, if you do have questions and you ran into any issues with this, you can please follow up with us. I'll leave my email once again, Matt, M-A-T-T, Masunas, M-A-C-U-N-A-S, at ctgreenbank.com. And we are also hosting this webinar once again, noontime on Monday, noontime on Tuesday. And with that, I'll hand it back over to our presenters.
So this is Vicki Hackett again, and I just really want to thank all of the presenters and Brian Garcia, President and CEO of Green Bank as well, who had a very active role in getting this all put together for you so quickly. But most of all, I want to thank all of you who attended and who are really on the front lines of this issue. And with your input and feedback, you know, we'll be able to provide, you know, guidance that's tailored to you as we move through this crisis. And again, this is just sort of step one of our engagement on this, and we'll be engaging with you on this and other issues going forward. So stay tuned. And be well, everybody.